Oh, hello. I didn't post yesterday. I got distracted with one of my new toys. But we're back and we're going to be discussing a couple of important indicators and why they work. It took me a long time to realize that TA doesn't work because it's magical numbers. Humans are emotional and humans run the market. And indicators are a reflection of the emotions that people are feeling. One of my favorites is Bollinger Bands. I like to think of the stock market as a bowl of water, and all the investors are walking around with that bowl of water, and we're trying to keep it still. We're trying to keep the price what it should be. But because of news and different things that happen, the bowl tips while we walk. And us as investors try to get it back to equilibrium. So we tip it back and forth, and the price falls to either side of the range. When you slosh a bowl, it's not going to completely fall out and do a 360. You're going to correct it and it'll go back to the other side. Price works in the same way, and Bollinger Bands are a way to visualize that. It measures the volatility of recent price movements. And so by investing accordingly, you can get yourself better entries and exits based on, oh, this is probably which side of the bowl the price is on right now. So today, to visualize that, we're going to be looking at Ethereum, the SPY, and the New York Exchange Composite on the short, medium, and long time frames. Starting with Ethereum on the hour. Bollinger Bands are great because a lot of the time you can cut off the back half of the screen and only look at recent history to see what's going on, because this is the truest, up-to-date, present valuation for whatever the asset is. On the hour, it's a little skimpy of a time frame. There's not as much information to look at. You have to be more careful when you enter trades on the short time frame. But even right here, if you're a day trader, it fell out aggressively at 36.70, and if you were brave and bought that up, you buy it up to 38.60. That's like a 4% gain. Something like that is all you need in the day. But for long-term plays, it's better to check the bigger time frames. Over to the SPY on the hour, the last little bit has been awful. So if you're a day trader, maybe zoom out first. The entire market has been having a pretty brutal sell-off. I like to think of the yellow line as the true value. A lot of the time, that can work as support or resistance coincidentally. So right here, buying off of the yellow could have been just as much of a buy because it seemed like the market was very strong. Right here, it's working as a resistance, a soft resistance. And right here as well, it looks to be working as resistance. But again, we are under the lower band, so it's not the worst time in the world to buy. The worst time in the world to buy is right here, right here, right here. So it's a pretty common trend. It's easy once you start to spot it. Let's head back to Ethereum and zoom out a little bit. On the daily, we're also being dragged through the mud. You never know when these things are going to stop, but pretty much every time that they fall out, they at least have a short-term bounce. Boom, bounce. Falls out, bounce, falls out, bounce, falls out, bounce. Eventually, once you fall out, you will stop falling because price will flip the other direction. And so if you had been the person to buy right here because you were brave and it was at the lower reaches and you held on and added to your long-term bag, that's 130% gain. It's pretty nice. But if you're the kind of person who buys off of momentum and you say, we're up at the sky and we're going to keep going, you might, but you made a 5% and then you made a negative 24%. So not genius. Right here, you can see that we were thrown up against the top range of the Bollinger Bands for so long. And whenever that happens without a retest, violent things happen after. No matter the asset, no matter what, we were up for so long. And because of that, we had to come down, and we came down hard, negative 60%. So these things are easy to see when you can see that the water is completely sloshed to one side. Bollinger Bands are good for that. SPY on the daily, kind of floating in no man's land. And the composite on the daily is seeming to be pushed off of the true value. So that's something to be careful of, because in a downtrend, we haven't even had a true downtrend in a long time. So if that truly does start to get pushed off, that means instead of us having a heyday buying at the yellow line, we're going to have a heyday selling at the yellow line. Now we move out to the monthly, where things get significantly more interesting. This is the truest way to look at an asset because it shows pretty much the life of the asset. It shows very clearly where things are in relation to history. Oh my gosh, look at Ethereum. It doesn't look like such a great place to buy it anymore, does it? Based strictly off Bollinger Bands. You can do your own TA with other things, but this is just about Bollinger Bands. And if we're looking at this is not a great time to buy it, because even just to retest the true value from where we are, that's a 49% drop. It won't necessarily happen tomorrow, so there's still trades to be made within the daily and even the hourly. But for a long-term position, This is not awesome. What you want to do is find where we touch it, and if you believe in the asset and you think it's a good company or a good crypto or anything, that's where you buy it. You would have bought Ethereum at $90, ridden that all the way up over 5,000%. That's incredible. And you can do that if you have an understanding of, oh, people are way too scared right now, or people are way too excited right now. So that's why when we were up here, I feel more comfortable putting in a short, because I feel like we have a lot more room to the downside than room to the upside. Even if we're right here, let's see, and we're coming up to the top of the band and we come out of it, that's a 20% gain. Awesome. But if we get up here and we don't keep going, or I don't sell, then we head back down. It's a 57% loss. It just doesn't make sense to be buying something like that for the long term. The SPY on the monthly is in the same situation. Wildly up here. It went up over 100% in a year. That's pretty incredible. And listening to everybody saying it's only going to keep going, what do we know about the bull sloshing? It usually doesn't shape up like that. And even if it does go up a little bit further, comes up here, has a 13% rise, well, you're still risking buying into that for at least the same drop. Or if we come back down to the bottom, like we probably should after that rapid ascension, then you're looking at 2 to 3 times the drop. So risk to reward, again, is not there for your long-term bags. Let's play a game. Find the good places to buy. Yep, if you said here, that was fantastic. If you said here, that was fantastic. Here, pretty good. Fantastic. Fantastic. You have to buy when things are so irrationally down. And you have to sell when things are so irrationally up. And that's how you can make so much more money. Right here where we're in the middle, it's kind of tough. It's a tough decision to make, because just as easily we could head back up and that's a nice 14% gain. Or we could head down and that's a 28% loss. So making big decisions for your long-term portfolio, I feel like, is best to happen when you're at the boundaries of a Bollinger Band. The monthly is almost always a good time to buy at the bottom. You can just see it. It very rarely touches the bottom band and doesn't bounce. And that goes back everywhere. So if you buy on the monthly, it's 100% gain. This is in stocks, not crypto. So that's more monumentous. Another 100%. 40%. 80%. That's fantastic. But if you buy pretty much anywhere else where it seems like, whoa, we're in all-time highs, follow the trend. The trend's your friend. Okay, I'm buying at all-time highs. Rode it up 22%. Fantastic. I'm a genius. 22% a year. I'm beating the S&P. And then it sells down 56%. And you're like, where did I go wrong? You want to counter trend. Trend is your friend because it tells you what not to do. One last little indicator tip, not Bollinger Band related, but for those of you who are familiar with charts, chart patterns and everything, I drew this line back in July, right about here. I noticed that we kept touching it, getting rejected by it. It came up a couple times, but every time we had a big sell down. And so I zoomed out and I was like, oh, that's an ascending wedge. Those things tend to break to the downside. That's what they say. And the target is where the wedge started from. So if we break down to where the wedge started from, say it's there, that's a 40% drop. And why it seems like it's likely is because we fell out, tried to get back in, didn't really, tried to one more time, and we're struggling. People don't want to buy when it's all the way up here because of the same thing that I'm talking about. When it sloshes, rational people say, oh, it's going to go the other direction. That's what people call the smart money. I just call it the people who think. What's crazy about this, though, even if we do have that 40%, 30% drop, that still puts us in bullish territory. So if something more dramatic happens and we have a true correction, and you see how we overcorrected to the top, if we overcorrect to the bottom, that would be crazy. And that's not something I would ever stake my investing strategy on. But this does not look good. When you zoom out, you can see this is pretty parabolic. The only thing for it to do is to give us 200% returns next year, or that. Very, very, very rarely does it keep heading like that. That's just a funky looking chart. And after looking at hundreds of charts, thousands of charts, I have never seen that. All right, do what you will with this information. The next video will be on Fibonacci retracements.